So fair value gaps, inverse fair value gaps, what they look like. Um, you know, fair value gaps first, it's just a gap that price looks to fill, either as a continuation structure by just tapping it and then going with the trend. So like kind of reversing short term, continuation long term. Um, And then in the case of an inverse fair value gap, price will kind of inverse by completely filling the fair value gap. And that can be used as like an entry for a like longer time frame reversal in the opposite direction that the original fair value gap was made in. So that's a lot to digest. So let's actually show it now. So yeah, definitely not going to use shorts first. I feel like at least when I was learning this shit for the first time, it was easier to kind of comprehend it if we were doing like fucking a bullish trend. So where's the fair value gap in this example? Say these are 5-minute candles right between these blue lines. So it could also put this. It's really just an area that fucking price isn't filled yet. So obviously, that being said, same thing if we have it in shorts here. Either way, still fair value gap. And I'll even like, especially on microstructure here. What I treat this at? I'm looking at GJ right now because I was thinking of a short bias because long, long time frame. Well, highest time frame we're in like uptrend. Then like second highest time frame we're looking for shorts. And then like mid time frame right now, we just made a new high, which doesn't really help our bias. So we're really wanting to take shorts just because of the high time frame trend. So we're gonna want to wait, and hopefully this happens by tomorrow morning. We're gonna want to wait for a mid time frame downtrend to happen, because then we can hop on with a microstructure and all that and get some good fucking trades in there. But no. So back to the fair value gaps. That was kind of a tangent. Once again, white chocolate, raspberry, cold brew, very good. But no. So this is the fair value gap. We're not gonna go to chart examples yet. So what will price do off this? And we'll honestly go right back to the bullish examples just because I like it better. And obviously, unless your settings are weird, that's not going to happen in market structure. You're not going to have green candles going down. So let's use our brains there. So blah, blah, blah. So we go here, red, the bearish candle. And then here, with this candle that taps into it, as long as it doesn't fully fill that shit, it really doesn't matter if the body fills it. You know, maybe you'll get a wick to fill it. What color? Ooh, I must have been actually looking at trade ideas because these aren't the last color. But either way, that's just a fair value gap being filled. And the reason why you can use that as an entry is because commonly, which nope, if price closes here, commonly we'll tap that, and if we don't fully fill it, then it's a indicator that we're going to keep going with the trend. Am I going to do a shorts example of this? No, because it's the same fucking thing. And like obviously when we get to market, we'll show actual examples both ways, but just a basic overview. Fair value gap, sign that price is going to go in the other direction. And then we'll show a little inverse fair value gap example. Now we're going to use this with a individual candle structure because with fair value gaps and inverse fair value gaps, they are good confluence, and I think I said this in another video. They'll help, but are we just gonna blatantly take a trade off of this shit? Fuck no. So then, and this is something that I'll use very commonly as an entry confirmation. Obviously, I'm using my fib and all that shit too, but like this right here alone, this is enough for me to take a trade. If there's liquidity at this point and it makes sense for price to touch this point. But, we have our inverted hammer here, and then we also have an engulfing here. Maybe we'll do like the wick up to here, some shit like that. So, and then you see how this candle, actually we'll do it a little bit more. You want to make sure when you're spotting an inverse fair value gap, you want to make sure that you're filling the fair value gap. Like, because the whole reason why it's like a indicator that price is gonna reverse is because if we take out this liquidity and we fully fill this fair value gap, and that's another thing, with an inverse fair value gap, at least when I use it, it has to be the body. Like, this shit doesn't count as inverse fair value gap. It has to be the entire body of the candle has to cut through it, and kind of. So the way market moves, we're actively seeking liquidity, taking people out of their positions. So if we completely fill this position, then it's not there anymore. So there's no reason for market to go back up to it. Now we might get like a retrace back up to this order block, which we'll explain tomorrow. But at least for this area of liquidity, and that's why you want to use it with other confluences, there's no reason for us to retrace back to this point. So kind of a brief overview of it. Actually, I have more stuff in my notes here. So, yeah, fair value gap, sign that. And we're not even doing just a fair value gap. Like, you're never trading just off of the fair value gap. You're trading off of the retracement into the fair value gap, and whether that's a wick, whether it fully closes in there, and it creates an IFVG, any of that shit. So, blah, blah, blah. Damn, I already touched all this shit. That's how you know I know this shit, because I'm looking at my notes, and I didn't even get to this point yet, and I already fucking said all this shit. So yeah, you'd want to use it like an IFVG plus a micro BOS, IFVG plus like individual candle structure, like we said. Here's an example kind of with the micro BOS. And this is actually very high confluence. We don't want to have a fucking hammer, because then there was would be no point in the other shit. So, blah blah blah, we get that. And then right here, lower high. And then all of a sudden this fucking A, we get the lower low. And then B, we also get the fucking IFVG. This is a fucking shit ton of confluence. And if you could stack it with the individual candle structure too, this is about as fucking high confluence of an entry as you can get, I would say. So, blah blah blah. Damn, wow, we did this shit good. Holy fuck. Okay, so I guess we'll just go straight to examples. We'll also get a little peek at GJ again. I should start doing this on my secondary chart, so I'm not doing this. So we're about to fill that fucking gap, so our bias might be all fucked up for tomorrow. Anyways, so I'm sure there will be a good example in here. Obviously, like we were talking about with the liquidity sweeps, high wicks, neutral high, or whatever the fuck I called it. I think that's what I called it. It was something like that. Names don't matter. Identifying them matters. So, right here, we have an example of which price already filled this fair value gap. Well, there is no fair value gap, actually. It would be all the way up here. But you can kind of see with this next one, we fill this little tiny ass fair value gap with a wick. And what does price do? It moves down. So you can kind of see we retrace to the fair value gap. Then we get a micro break of structure on this candle, and then we go down. And then in the same sense, we'll go over here. So we have this bearish fair value gap right here. And then what does price do? High, low, higher high, kind of a higher low, but you also can use it as an equal low, which helps our confluence, and we filled in that fair value gap. Would I take a trade off of that? Depends on the other confluences. As of right now, I don't really think so, because we didn't really break through with a shit ton of conviction, but it is there. This is some choppy price action. See, I don't really like this shit. So then it kind of makes sense here. We're going down, and then boom, we have a fair value gap right here. Zoom in a little bit. We fill this fair value gap for the retrace, and then what do we get? High, low, lower high, lower low. Really would want to confirm off this candle, then we go down. And then in the same sense, do we inverse the fair value gap? Is there any fair value gap to inverse? No, not really. So right here, pretty good example of it. As you can see, did we fill with this? We're looking at this low right here. Did we fill this fair value gap? No. Like, we didn't inverse it, but we retraced to it, and then we went up. And then what happens here? Then we inverse this fair value gap. So would we take a trade off of this? I wouldn't, but you could, because high, low, lower high, lower low. And then, so you could enter on that, or if you wanted a higher confluence, you could enter on the fill of this fair value gap. And I don't know, where would we really want to place our... First off, let's get our short position here. Closure of this candle. If you wanted to trade microstructure, you could do this last high. Realistically, you'd want to do this last high, because who's saying we're not going to fill this order block? But no. So it would go off that. And then, since we're in a downtrend, one could make the argument, it's high here equal highs. One could make the argument that price is at least going to continue to this point right here. So, is that super high confluence? No. But you have to remember, where's the inverse fair value gap we just had? And this is the reason why you'd want to wait for the inverse fair value gap, because if you just traded off of this micro BOS here, you'd get in here on the closure of this candle. So you'd have about a 1.3 risk reward. But if you got in off this IFVG, which is right here, then what part of the move is this IFVG off of? One could... Realistically, I wouldn't really classify this as a fucking swing low here. But even if you did classify it as that, what's that? So you just made 200 extra bucks off of being a little more patient. But I wouldn't even classify that as the swing low. I would classify this, you could really use that, or you could use this down here, and then $2,500 trade-off of being a little more patient. So that's why that's kind of if you wait for more confirmation, your trade is going to be have a higher chance of going through. And then you can also use it off a bigger market structure. So you're not just trading off of these highs and lows, and that's kind of where the multiple time frame analysis comes in too. You can use these highs and lows. And low key, so say you were trading off of that, since this is part of this move, so you'd want to be very cautious when you're doing this. For that example, you'd still want to, even though we filled it, you'd still want to take partials over in that area that we discussed, the 120% extension. But because market's going in your favor now, all of a sudden maybe you take half your position at the other 120% extension, and then you take half of it here. So say you have a $500 position, you closed, I think the other 120% was right around here, some shit like that. So, no, it was like over here. So, that's like $1,100, $1,200, and then you close the other part of your position down here, which it takes a while to get to, but it does get to. Then, you just made $1,500, you just made a fuck ton of money, my friend. But, no. So, kind of a few more examples, I guess. Ooh, I'm sure there's gonna be some shit in here. Yeah, so, okay, so, actually this kind of helps our guys. So if we have a big ass dump like this, then yeah, you can get some pretty good positions in here, like, because most of the time price is gonna have, it's always gonna have some sort of retracement, but it's gonna take, like, if you have a big ass dump, like, what was this? In fucking 21. So in less than 1 day, we moved fucking 203, we moved like 200 pips. So if on average GJ moves 120 pips in 1 day, is the trade going to get filled in 1 day if we're using this structure here as our take profit? No. So that's why you have to kind of be careful. But theoretically here, what do we get here? So blah, blah, blah. Down, micro BOS, blah, blah, blah. So right here, do we have a... yeah, we actually could use it for this example. So we have a sort of fair value gap right here, and it doesn't fill it in this trade, but this is kind of just like a nice example of it. So, okay, right here, fair value gap, we fill this fair value gap, well, we retrace to it. So you actually could take this because you get your micro BOS right here, high, low, higher, high, not a high or low. So actually, maybe you wouldn't want to take it. But anyways, just say market conditions were good there, and whatever, we get this fair value gap retracement right here. We enter off of it. We'd want to enter off of at least some sort of confluence that we're going to go up. So maybe like that dogi plus the somewhat of a extension candle here. Then, which I'm sure it's filled, something like this. Then you can start aiming for this fucking 79% extension, you know, and that's 8 times risk reward. Is that going to play out in your favor every single time? Fuck no, especially under those market conditions. You have to know what you're doing. That's why it's like some market conditions, like you would never trade off that, even like someone like me, TJR, because you're smart enough to know how to trade it, and you're smart enough to know not to fucking trade that shit. Like, if we just dump 200 pips, are we looking for anything long position-wise? No. Ooh, this is a good one. And this, I think I actually made money off of this one. This is the only time, just because I kind of caught it, and this was honestly me going against my strategy. I think I only made a little bit, but I made like 1,000 off this. I saw this fucking fair value gap here. Big ass one. Then I saw this fucking wick. I think like 1 minute in here, we already filled it. So I pretty much just got on it and I like targeted, I think I targeted like a 79%, something like that. Yeah, so I targeted right around this 79% extension. And like I said, we made like 1,000 off that. That's not really anything strategy based. That's kind of just one of the examples like we were talking about before, where when you're trading for long enough, you kind of just pick up on the way the market moves. If we create this pocket of liquidity and then we fill it that quick, it's a good indicator that market's going to go up. Because what makes market move? Liquidity. Why would we go down if there's no liquidity lower? And same thing with going up. I do have to say, I kind of miss the liquidity and the volatility we had like probably 2 weeks ago. I miss that a lot, not gonna lie. But no, honestly, that's probably enough for y'all to understand this shit. If it's not, just fucking comment, say it's not, ask for a part 2, something like that. But homework for tonight. We're gonna go a little different this time. Homework for tonight. Spot 3 fair value gap retracements, and then what to do after the fair value gap retracement. Or let's get a little review, I guess. Damn, there's really thin liquidity here. But what to do after fair value gap retracement? Go in the same direction. So say we have a we're in an uptrend, high, low, higher, higher low, fair value gap here, dip into that, shoot up. And same thing can be said with a downtrend. So spot 3 of those. Spot 3 inverse fair value gaps that led to a trend reversal. That one you could do it on your own. Probably gonna take longer compared to if you find a fib, because if you use a fib, you're looking for actual zones and you're gonna know whether it's gonna hit or not a lot quicker. Yeah, we'll do that, and then yeah, we're gonna be a little light on the homework tonight. It's a Sunday. You guys, I'd assume that you guys have been working somewhat hard, so yeah, we'll go on that. Extra credit. Use this inverse fair value gap, either or. Use this concept along with some other confluences to make like 3 or 4 good trade ideas, and have a good one.